Trading psychology. By the way, if you would like to get this small PDF, it's not something special, just topics. Uh, I will send you, no problem. Just let me know. Yeah. We are going to talk about probably the most important thing in trading psychology, right? Because technical analysis, it's not that easy, but it's not that difficult. We all understand, we all could do it different ways. It doesn't matter, it has to be divergence or anything like that. Different ways, million ways of trade, right? So we all know something. Technical analysis, it's pretty easy. Most of us, and even myself, fall in psychology things. I used to be there a lot, and well, it will be a lie if I say that I don't have any trading psychologist, because I do, but I solved that by leverage, and I will talk about it a lot today. Okay, we'll discuss about that, emotions and leverage. We'll talk about that. I would say only one thing from my point of view. I really think that there is no one trader in the world that doesn't really suffer from any psychology issue. That's okay. We are all human, and when we deal with money, most likely psychology issue will appear. And the thing is, some we can solve, with some we can we can still trade despite of them, with them. Okay? And we can use it as advantage, for example. And I will explain everything today. So the things we are going to talk about are all the things that ruin our trading. For each of us, it could be different. It could be emotions. It could be fear. It could be not enough knowledge. It could be too much knowledge. It could be leverage, too many strategies, dream sellers, boring days. It could be too many instruments to trade. It could be trading style, money management. It could be the pressure of making money, and we'll talk about that later a lot. Being right or make money. This is something this pretty famous one. I hear from all the traders I talk to worldwide. I hear, I was right, I was right, I was right. The euro did the move, the euro did it. But on the bottom line, did you make money? Yes or no? Okay. Did your account progress? Yes or no? We'll discuss about that a lot. It's bad mood trading, also very common mistake, and the old school beliefs, and we'll discuss about that as well. Okay, so that's all the things. Of course, there might be more, but these are the most important things from my point of view that ruin our trading. And each of us could suffer from any of those. Emotions. Why they appear, first of all? Well, I would say that very simple. Everywhere where money involved, there are emotions. The more money you have to spend free, right, the less emotional you become about money. Very simple, right? Same in trading. The bigger your account, the more comfortable you become. But when you trade with small account, you become very emotional. And that's okay. As I said, we all human. We just need to learn to control these emotions and to learn to work with them. So they appear everywhere where money involved, and that could be even when you go to buy a present for your friend or for your family. Okay? Let's say you buy a present for your kid. If you have, let's say, $1,000 free, completely free, that you can spend, then you will go and look for something good, right? That you know for sure he will like, right? Because kids always choose the most expensive things, right? But if you don't have this free money, you will go and look for other solutions, alternative solutions. Something cheaper, something less known company, right? Maybe not a big Lego, maybe just, you know, some track to play with, right? And that's okay. The same in trading. Emotions come everywhere money appears, same in trading. And the more, and that's something where I find many people make mistake. The more money you have, the less emotional you become. Many tend to think the more money you have, the more emotional you become. Emotional, you become less emotional the bigger your account is, because you know that let's say if you have $10,000 and you lose 5,000, that's 50%. But if you have $100,000 and you lose 5,000, it's 5%. So you can be much more comfortable with that, right? That's what I'm talking about. Now, how to overcome them, the emotions? As I said at the beginning, I do not think it's possible. This is a part of trading that I don't think it's possible. Everywhere, it doesn't matter what book you will read on or what seminar you will attend, they will tell you trading with emotions is disaster. It's true. It's true. It is. But how to overcome it? And I think that the only way to overcome emotional trading is control your lot size. Okay? And I always compare it to very simple example. Let's say you have $10,000, okay, and you open 0.1 lot size. It means each pip will be equal $1. How would you feel if you will be minus 2,000 pips? Okay? If you will feel bad and nervous and stressed and you will feel pressure, it means that this lot size is too much for you. Take the same $10,000 and let's say you don't trade 0.1 but you trade 0.05. How would you feel if you will be minus 2,000 pips then? Your loss will be 2 times lower. Smaller. Would you feel more comfortable with that? The answer is yes. Okay? Every trader has its own emotional place. Emotions are controlled only by the lot size. The lot size controlled by your account. Okay? And that's exactly why I said earlier that the more money you have, potentially the less stressful, less emotional you become. I know that not everyone has $100,000 to trade, and that's okay. Not everyone has even $10,000 to trade, and that's also okay. But you need to find the way to trade comfortable with the money you have. If you have $1,000, okay. So long-term trading is not for you. For example, okay? Because a big loss or a big running loss could be very harmful for you, for your emotional trading. I sent you an email, by the way, about that 2 days ago or 3 days ago. Okay? So the way to overcome the emotions is the only way to learn to accept them. You have emotions? Good. Don't avoid them. Do not get rid of them. Accept them. Control them. Control them. It's like I always hear this example from Good Life and Everything lectures. If you have a friend that takes out energy from you or brings bad energies from you, if you have a friend that only complains, oh I feel bad, oh I'm so unlucky, oh this happened to me and this happened to me and this, and you never hear a good word from him, but he's a friend. You cannot tell him, you know what, I don't want to be your friend anymore. But you can avoid talking to him every day. Right? You can talk to him once a week or once a month. You still will be friends. You still can meet. But you will not suffer the bad energies every day. Same in trading. Same with the lot size. The bigger your lot size and the smaller your account, the more emotional you become. How to overcome it? Do exactly the opposite. Take smaller lot size. Take a strategy that could work well for your potential loss. Find a place where you feel comfortable with. Okay? Emotions always will be there. It's impossible to get rid of that unless you are a machine. But if you are a human being, you cannot avoid emotions. And that's something that I believe. Maybe I'm wrong. Maybe I'm wrong and maybe I'm too young to talk about that. I don't know, really. But that's my belief. Every seminar I attended and every book I read, they always told me, avoid emotions if you want to become a good trader. How? How? I don't think it's possible. And that's something that no one tells you. Well, at least no one told me. So it's something you have to learn to live with. Okay? And make it an advantage, not a disadvantage. Emotions is not a disadvantage. It's your potential advantage. You can benefit from it. Because if you get emotional, you can lose much more, much faster, and make much more mistake. And if you learn to deal with your emotions and turn it to good emotions by controlling your load, by controlling your risk, controlling your involvement in the market, this way you can make it for good emotions. Okay? And just one last sentence. Many people told me in the past, the only way to get good emotions from the market is to make money. Yes, it's correct. And if you are among these people that the most important thing to them is to make money, then you should find some strategy where most of the times you see plus. Or at least some plus. This way, if you see much more plus than a minus, this way, if one minus appeared, then okay, even if it's bigger than the profits, okay, but this way you could accept it. Right? You could accept it. Because, okay, so I lost once. It was pretty big, okay, but at least, right? I had a good winning streak, so I'm happy. Okay, and that's okay. If you are, if you have this mentality, that's okay. Don't fight. Don't think you are wrong. Don't think you are bad, and don't think you are a bad trader because of that. Exactly the opposite. Make it as your advantage. Right? Do you all know Jose Mourinho, right? The trainer of Real Madrid. When he was a trainer of Porto, when they won a Champions League, I'm sorry I'm taking this to sport, it's just an example from uh, the life I understand. Um, when he was with Porto and he won Manchester United, he was asked how you did that, and he said, "If you have a Lamborghini, but I have a Fiat, the only way that I will beat you on a race is if I harm your brakes." Right? If I harm your brakes, your pedals. And that's true. Don't think you are bad. Take your advantage, take your power, take your limits, take your disadvantage, and put it on your trading style altogether. Okay? Don't fight your character. Don't fight your psychology. Take it and use it. It will only help you. Okay? That's very important to understand. Because many people think, oh, I'm bad trader uh, because many reasons. Okay, I can count them. They're countless. Okay, I'm better because of that, because of that, because of that. You are not a bad trader. You are a good potential trader that just fight his character, his psychology, his qualities. Don't do it. I have personally a lot of bad qualities as well. Really, but I learned to overcome them. I mean, I'm trading, yes, I'm trading. Not as a tennis player. No, as a trader. Many bad things I can tell about myself, really. But I learned to live with them. I learned to control my bad things. And once I learned and I understood what makes me lose money and I don't do it, this way I started to become profitable. Yeah, and it's important to understand that. It doesn't mean I'm better trader than others. No, probably even worse. Okay, but it's very important to understand. If you learn to live with your disadvantage, you will become a good trader. Just learn to live with them. James said, when you are a professional trader trading with other people, money is money is easier from the emotional point of view. Well, I don't think I have any clear answer for that, James. Um, I don't think it's different if you're a professional. What is a professional trader? Can someone describe it? What is a professional trader? Trader that what? That has experience of 15 years? Of 20 years? Of 50 years? Trader that make money? If someone shows you an account that he turned $10,000 into $20,000 in 1 year, is he professional or no? Even if he's 1 year on trading. You know what I understand? You understand what I mean, friends? You understand what I mean? That what is a professional trader? Who is a professional trader? A one that works for a financial organization? It doesn't make him professional. I have been there, James. I worked for a hedge company. I worked for a broker. And most of them, believe it or not, are not professional. The professional are the supervisors. Because this is, and the professional for me is, it doesn't matter how long he's in the market, but if he's trading his strengths, and if he takes his positive things and put it into his trading, and makes money, proven, then he's a professional. Then he's a professional. Okay? And with that I could agree, Nigel. If he's making that for a living, it turns him into professional. Most of the times. Okay? So, it's all recorded, Goto. Okay? It's all recorded, you can hear it again, okay? So that's something important to understand, and the answer is well, James. When you trade with people, other traders, it could help you overcome your problems. That's don't get me wrong, but that's one of the advantages of the Skype group. We have a Skype group for the VIP, and all the guys just share their mistakes. This is perfect. That's the way to learn, because it's like a mirror. When I used to work for a broker, I was a dealer. And that was the point that my trading turned around and became profitable, because I did the same mistakes as the clients I talked to. I did exactly the same. I'm not talking about strategy, okay? I'm talking about psychology, about emotional trades. I did exactly the same as them. And I was looking at myself, and it's like a mirror. I'm talking to someone that I don't know, and he's doing exactly what I do, and he loses money. So I am doing something wrong, and that's what I have to change. So when you talk to other people, it could be a big advantage. It could be a big disadvantage if you start to hear everyone and, oh, he's doing that and he's doing that, probably I should too. No, we are all different. And that's exactly the reason why some of you are lawyers, some of you are builders, are accountant, or I don't know what. That's exactly why, because each of us is different. You just need to take your strengths and put them and convert them into the place where you make money from that. That's all. And don't think you are better or worse than anyone else. No. And about myself, I tell it always. I'm not better. I even worse. I worse than other traders, because I have my my trading psychology issues. Always, I admit them and I work with them. I found the things where I fail and turn them into advantage. That's all. That's by the way, how investor style, for example, was born. When I started to read more and more and more about investors, because I wanted always to be one. But we'll discuss about it later. It's not about emotions. Questions? Okay. The next thing that ruin our trading is fear. It could be fear of losing money, it could be fear of failure, it could be fear of life partner, it could be fear of success. What's the fear of losing money? Well, it's very simple to understand, right? And you afraid to lose money only if you do not have money. If you have money, you can allow yourself to lose money. If you have money, right? If you have free money. If you have $10,000, you can allow yourself to lose 1,000, 2,000, or 3,000. But if you have only $1,000, that's where the fear of losing money comes. That's exactly where. All right. So this is going hand by hand with the emotional things. If you have small account, don't think you are bad. Don't think you have problems, and don't think you cannot become a trader. Of course you can, but you have to find your style for you. Just for example, if you have $200 account, that's too small, okay? Let's admit, you cannot do anything with that. But if you have $1,000, This is something you can begin with. But you have to find the strategy or the method that you will feel comfortable with. And for example, investor style is not for you. Trading weekly charts is not for you. Okay? As simple as it sounds. So you need to find something for short terms, with very small risks, very small lot size. But the most important thing is to remember that if you take small risks, then your growth also will be small. And this is another thing that we will talk about it later, but this is another reason why so many people fail. They want to take small risk but huge profits. And I say, wake up. It is impossible. If that would be possible, wouldn't you think we all would become billionaires already? Oh, it's good by theory. Okay? But in reality, it's not like that. Fear of failure. Many people afraid to fail because many people find forex as the last opportunity. Many people do I don't know why, but this is a very common mistake. They have a small account, $1,000, and they leave their jobs because they want to dedicate themselves to trading. Well, this is probably the worst thing to do ever. Ever. How could you leave your only income and to go for something that you just a beginner at? How it's possible? I know it's a dream, and I know all the things that they say, think good, it will be good, and think positive, it will be positive. Yes, and I also believe in that. But when you have a fear of fail, you cannot succeed. It's impossible. If you cannot allow yourself to fail, you cannot ever success. And that's not only in trading, that's on everywhere in life. You cannot become a famous artist if you did not fail many times on the past. Do you know J.K. Rowling, the one that Harry Potter author? Did you know that she heard no about the idea of her book from like 16 or 17 agents, books agents? They told her, "Come on, woman, what's that? It will never sell." And she never gave up. But she failed a lot. You know how difficult it is to hear no? When you come with your dream and people, professional people around you tell you no, you know how difficult it is? You know how many times I heard no all my trading life on the beginning? Too much. Too much. And I still hear a lot. My friends still tell me, how you do that? It's impossible to make money just from trading. Okay, so they say. Back to J.K. Rowling. And at the end, she found the agency that accept her, printed her book, and we all know where she is. If you cannot allow yourself to fail, and not once, several times in a row, don't be there. Don't trade. And remember this sentence, the next sentence. A loser is a winner that gave up 1 second before the win. Remember that. It's very, very true. The fear of life partner. Well, if you're married or with girlfriends, boyfriends, or whatever it is, and one of the hardest things to go through is to afraid of your life partner. And if you hear always, no, you cannot risk money, you cannot go and trade, or things like that, or someone that does not believe in you, well, it's difficult to say that, but it's most likely impossible to trade. You can't do it behind the back. I don't believe on that, because then it becomes here, the fear of the failure. Okay, I don't believe in that. And if you suffer from that, find the way to get support from your life partner. I know it's easy to say. I know it's easy to say. I know. And not everyone gets a supportive partner. On this way anyway. Where it belongs to money. Okay? Where it belongs to money. Not everyone could support on something that is unknown. But find a way to explain and to live your dream together. To live your goal together. This is the only way. This is the only way to success. When the closest person to you support you and believe in you and gives you the energies you need, then and only then you can trade calm, sure, relaxed, confident. Okay? Right? And fear of success. I saw during my trading life many people that afraid of the success. What do I mean? They build a long-term plan. They start to trade with $10,000, for example. Okay, just for example. They turn it into 12,000. They are 20% profitable, and they run away. They run away. They take the money and that's all. They cannot back to trading ever. Never. And this is, from my point of view, related to each of these. Because when you become successful, you become very stressful about the potential failure that could come. You start to afraid of losing money. If I profited, I cannot lose it. Or the fear of the life partner, or from good friends, or from family. Because if you make money and you tell them, the expectations from you are growing. Right? People start to think, aha, he's making money. Take my money and make me too. Take my money and make me too. Right? I hear it always. My friends always tell me, if you make money for yourself, make for us too. Take $10,000 and trade for us. No, thank you. I will not. Never. And that's a fear of success. Many people just cannot deal with the idea that they will be successful trading, because then many other things could come. The way to overcome it is do not share it with people around you that you know that will take it to bad place. Keep it for yourself. Quiet success. We all know that there are many famous millionaires, famous billionaires, everyone hear about and everyone know, but there are many that no one ever heard about. And what do you think? If you take famous artists or famous authors, right, that was followed by paparazzi, many of them failed after that. Many of them went to drugs, many of them make some mistakes, many of them, after the huge success, came the big drop down. And the reason for that, is they took the success to the bad place. And it happens mainly for people that reached the success and they want to celebrate it with everyone, but inside themselves they afraid of this success, they're afraid of the failure, they're afraid of the bad luck that could come after that. And we know that life is like a cycle, trading also like a cycle, life too. You're up, you're down, you're up, you're down, but after you're very high, it's very difficult to be down again. Emotional. And same is here in trading. So don't put yourself into this place if you suffer from fear of success. Goto, you ask any questions so far, friends? I make a stop for a second before we continue. Any questions so far? Goto ask, why not if I don't have money but skills to trade positively? How do I grow further? How can you grow without money? Can you grow without money? Of course no. Traders that do not have money to trade should not trade. Save money. Grow your account. Grow your account. Save more and more and more until you have something to start with. And never trade with the only money you have. If you save $2,000, you can risk half of that, okay, but never risk the $2,000. It could be a disaster for the future. Don't bring yourself into places that you know that could ruin you and ruin your life. Don't take yourself there. Okay? The next thing we have is not enough knowledge. And what do I mean? If you try to trade like an expert while you are a beginner, if you go for difficult things like divergences and convergences, for example, okay, it's a huge world of theories of things, and if you just started to trade, how can you really trade something that even is not technical? Divergence is not technical. We use all the technical things just to make the entries. But divergence is not even a technical thing. It's a fundamental thing. It happens because of the demands and the supplies of money. How can you trade it if you don't understand it? And that's a very common mistake. Well, I did the same mistake. I have to admit, I just started to learn, and then I deposited money, and I lost everything. And you know that I lost my parents' savings. That's my bad story that goes with me. But it belongs to the past. Don't think that if you read one book or if you learned one strategy, you are professional trader or you are a trader. Because I said in the past, professional is a very tricky word. Trade rumors without having an idea. How many people you know that heard somewhere that the euro will rise or the indices will drop or the gold will rise and go with that? How many people you know like that? I heard from Bloomberg, I heard from Deutsche Bank, I heard from Saxo Bank or JP Morgan or whatever it is that the gold is going up. And because of that, they take the savings and put all their money there. And I heard 2 months ago or something of someone, not from our club, luckily, but from another trader I know club. Someone that heard that George Soros sold some options of the gold. And he went and sold gold immediately with all money he had. The gold went up. It was before elections or something. I really don't remember when exactly. Gold went up very, very fast, and he lost all the money. Well, this is a very, very common mistake. And unfortunately, so many people fall into this trap. Do you know the banners on the website that tell you invest in Costa Rica, invest in Panama, buy a house here, buy a Iraqi dinar, right? Buy some land on some place. You know these banners? They're everywhere on the internet. Well, these banners are looking for easy money. They are looking for people that will believe it, will think everything is so simple, will put their money on a place where they have no idea, and guess what will happen? Maybe someone will become lucky, but guess what will happen to the majority of people? Did you hear about Zig Rewards company in USA? There was a company that promised if you promote them, it's like a MLM or something. If you promote them and post some advertisements through their sites, blah 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 blah, they promised something like 30% per month. By doing almost nothing. This company was live like 1 year, I think, or so. And the moment they started to grow, you can go and Google it. Zig, Z-E-E-K rewards. Zig rewards. You can Google that and you will see. After some while, the company was bankrupted and the owners were arrested like a Ponzi scheme. So, when you trade and you do things just without any idea, just by rumors, or just because you heard of a good friend that claimed I did money with that, come and invest, that's exactly where you need to be careful. And Kaz, you heard correct. I did lose my parents' savings at the beginning of my trading life. Luckily, I made it all back, and I paid them much more than the money that they gave me when they believed me. Yes. And this is a story that always will go with me. Unfortunately, that's my truth. I cannot get rid of that. It's that's one of the things that built me as a trader. The next thing is too much knowledge. Well, this is something that uh, professional traders suffer from. When you, if you think you are on a good place and you make money, I have one request from you. Do not close your ears because you think you know everything. Don't do it. Okay? There are things that could make your life easier. It's like, imagine a builder that built all manually, built all the houses during all his life manually with his hands, and he refuses to use a machine that could save him a lot of time, could be much cheaper, and he just refuses because he thinks and he knows he's a professional builder. And he refuses to use things that could make his life easier. And that's my big request for you. Don't do it. Even with divergence, I always learn new things. Always. There is no one day I spend without testing something. And no, I'm not looking for a different trading style. No, I'm looking to make my style easier. And that's exactly why, for example, Laszlo is working on his toolboxes. These things will make our lives easier, the divergence trader life easier. There are so many wonderful things that could help you. For example, smartphone. You can be everywhere in the world and control your trade through a smartphone. And I know many people, my wife is one of them, that tell no to smartphones, no to technology. If that could help you, why to say no to that? Keep your mind open, keep your mind young. That's the only way to stay connected to the world. The world is moving always forward, very, very fast. Don't close your eyes and your ears and your nose to smell the next things. Never. There is no such thing too much knowledge. Keep your mind open. I'm not telling you switch your trading style. If you make money, why should you switch that? Look to improve it. And I can tell you that my style, several years ago, I traded divergences only on the short term. Today, maybe 5% only from all my trades are for short term. That's all. I grew up into that. Look always to improve your life, improve your trading life, your personal life. And trust me, if you will keep your mind open and your ears open and your eyes open, you will find on your way so many wonderful things. Remember that. And this is the next very, very important thing. It goes hand by hand with emotions, and I'm talking about leverage. Have you been here, on here? Were you ever looking to make only 20 pips per day? Did you live this dream? Have you been there? Did you try? Only 20 pips per day, it's enough for me. It's almost 400 pips per month, and if I use 1 to 10 leverage, I will make huge money. Well, do you know someone that really did it for long run? I don't know, and I know thousands of traders worldwide. I don't know. I know people that did it for a month, for two, but then lost. Well, it's good by theory. Make 20 pips per day and using this leverage and all perfect. Right? But what will happen after losing 2 trades in a row? Most of these traders will lose their head. Not every day you can make 20 pips. Think about it. Let's say you started your day and you lost 40 pips by 2 trades. It means you need to make 60 to make this day profitable. And what if there are no opportunities? What do? The next day you're looking to make 40 net. And what happens if next day you start with 1 loss? Well, then you automatically look for shortcuts, increase your leverage, increases your trades, take riskier entries, right? That's the psychological places I'm talking about. Don't bring yourself into places where you know you cannot get out from. This is wonderful by theory. 20 pips per day, 400 pips per month is possible using 1 to 10 leverage. The problem? 1 loss, 2 losses. That's all. And what if you make 4,000 pips per month but you will not use leverage? And don't tell me it's impossible. It's possible. Oh yes, it's possible. Or what if you will make 20,000 pips per month on average with negative leverage? Sound it's possible? You know what? That's where I want to show you're wrong. People that think about it are wrong. And let me prove you why. Just one question. Sorry. Just one answer for a question. What's negative leverage? It's very simple to understand that. Negative leverage means take the amount of money you have. Let's say $10,000. One-to-one leverage. One-to-one leverage is if you trade 0.1. Right? It's one-to-one leverage. Everything that will be less, every trade that will be less than 0.1 will be using negative leverage. The more negative it is, the more safer you are. Let me. That's Windows 8, and I have no idea how to. Okay, there we go. I want to show you something interesting. Okay, many people think that they must trade on a 5 minutes or 15 minutes or 1 hour. Let me prove you wrong. Did you know that if you trade only daily chart, and let's say only divergences, okay? But if you trade only daily chart, there is on average every month or every month and a half there is any kind of divergence with a trade opportunity. Did you know that? You never know that, right? Let me prove you how. Let's take a what pair you want. I always like to show something exotic. People think that there are no opportunities there. Take everything you want. Euros are, pounds are, whatever you want. And this is, let's take a look. This is a daily chart. Okay, take a look. I start right from here. It's one year earlier. Let's see what we have here. Let's see what we have here. Okay, that was divergence and opportunity, right? Double. Just a second. Okay, double top, opportunity number 1, right? I just go by fast. I will not explain divergences here. I just want to show you what I mean. This is opportunity number 1. Then opportunity number 2. That's a bullish hidden divergence, right? Opportunity number 2. Let's continue. What else do we have? Okay, here this is opportunity number 3, right? Opportunity number 3, continuing divergence. There come opportunity number 4, deeper continuing divergence, right? Then come opportunity number 5, hidden divergence. Then come opportunity number 6, another bullish divergence, right? Then come opportunity, another opportunity is hidden, right? Or whatever it is. Then extreme, okay? Then extreme. Then what else do we have? Then we have a convergence, for example, right? Then we have a convergence. Then we have another hidden divergence, right? Here. How many we have? Do you count? 1, 2, 3, 4, 5, 6, 7, 8, 9. Already. I can keep going on and on, okay? And here we go, another one. It's 10. Okay? I can keep going. Here is another one. And here is another one. Okay? We have more than 10, more than around 12 or 13 per year on every pair, using only divergences and convergences on daily chart. On average, every month or month and a half, there is a divergence on a daily chart. Each of them could provide you with 100 pips move, at least. Okay? How many pairs do we have? How many pairs do we have? More than 40. How many indices we have? How many commodities we have? Right? I just put it here. Okay? How many commodities we have? Let's say 40. Okay? Let's say 40 pairs only. And on each, there is opportunity on average, every month. And each could provide 100 pips. Daily chart. It's 4,000 pips. 4,000 pips every month. On average. Only on daily chart. So, it's impossible? It is possible. And if you want to make 20,000 pips, trade also stocks. How many stocks there are? How many stocks there are? How many commodities? Still think it's impossible? It is possible. Now, I beg your pardon for a second. Okay, just 1 minute, I'll be back. Yes, sorry. Okay, so friends, the leveraging is what builds emotions most of the times. Okay? If you want to do this, trade only for 20 pips per day and using big leverage, and you think that's the way for you, you are wrong. Leverage is a bad thing. It is good thing only for one person, for one the owner of the broker you use. That's the only person that enjoy your leverage. And I always compare it to a bank. Let's say you want to buy a house. you go and you take a mortgage. Let's say it's like 50% from the house you take a mortgage. You know who is happy on this situation? Well, you will be happy for a short run, for 2 days or 1 month, because okay, I will have I have a house, all good, all perfect, my life is wonderful. But you know who really enjoy that? The bank. Why? Because you pay them every single month, on every single year, percentage on the money they loan for you. When you take mortgage, you use leverage because you are buying a house with money you do not have. But you are paying for that. How many years after that? After you buy a house, how many years you pay for the mortgage? Most of us pay the whole life. Leverage is bad. It puts you in the wrong places. You become stressful. You start to afraid. When you take a mortgage, how you afraid to lose a job, right? Because how I will pay for this mortgage, right? Don't bring yourself again to the places where you know you will suffer at. That's what I'm talking about. And I don't say don't take mortgage because we need, because with the high house prices and everything, we need. But at least don't do it in trading. Leverage can bring you in the place, on a bad place. And my opinion is the maximum leverage is not more than 1 to 2. Maximum after long time that you proved yourself, I know how to make money. And when I say 1 to 2, I mean per every single trade. I don't mean per all trades. Per every single trade. Never more than 1 to 2. Maximum. I use for myself, on my investor style, with my money, 1 to 3. Bit high as 1 to 2.5. That's what I do for myself. Negative. Negative, not positive. Negative. Negative. For myself. And I know trading. And I know how to deal with my trades. And I keep it negative. Always. Why? Because of the emotions. Remember what I told you? I know I'm emotional. I'm an emotional trader. And if I trade with leverage, I become very stressful. I become very emotional. That's why I never bring myself there. If you suffer from that like I do, don't put yourself onto these places. It's like when, like alcoholist, when you suffer from drinking, and you know that if you drink 1 glass, you become drunk, and you cannot control yourself. Don't put it yourself there. Don't put yourself into this situation. Don't drink. Same here. Questions? Goto, no. Don't use 1-to-1 everywhere. Find a strategy. For investor style, 1-to-1 is too risky. For example. For regular type of divergence, 1-to-1 is great. Leverage. Okay? Just find a strategy, find a method, and then you will know exactly what leverage you should trade with that. If you need some help, I can help you later by Skype personally. Some guidance for that, okay? The next thing, too many strategies. I talked about that earlier, so it's going to be short. If you have profitable system, don't switch it by a new, very promising system. Okay, do not. Sorry. Just 1 second. This coffee is still gonna. Do not change your profitable trading system for a new promising system. Look to improve your system, but do not change it. Just 1 second. James is asking. Yes, negative. 1 to 3 negative. It's 3 to 1 or how? Play with the numbers, James. I use negative. Negative. Only negative. And even when I trade LST, I trade 1 to 2 with LST, which is clear system of trading for separate accounts. Okay? I never go with leverage. I know these places bring me into bad place. These things bring me to bad place. I will never do it to myself. Dream sellers. Well, let's make it simple, friends. I've been talking about that many times on the past, everywhere. I don't want to repeat myself and to be annoying. We are all online. Everybody sell a dream. And the only reason for that is because this is the only way to sell. Right? Everybody sell dream. And I'm not talking only about Forex, everywhere. When you go and buy new pillow, they promise you this pillow will make your sleep, will make your night so wonderful. You will never feel nothing. Blah 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 blah. That's good. That's how the world works these days, and that's okay. Don't fight it. Just accept it. Okay. And exactly as you would never go and buy this pillow that promises you sleep well, if you don't have free money. Same in trading. Do not go and buy a dream software that promises you 100% every month. That's okay. Okay, that's the way to sell. If I would tell you you can make 1% per month guaranteed, you would even don't bother to to look into it, right? Or everyone else, right? That's okay. That's how we are people. That's how we are human beings. But exactly, I go back to the pillow example. You will not buy this pillow if you don't have money to waste. And same is here. Don't buy a new system that promises you dreams if you don't have free money to trade. If you have only $1,000 to trade with, forget about the dream seller. If you have free money to play with, to try, why not? Try. Try, of course try. Maybe the luck or some good energies will be with us, with you, and you will make money. Maybe. Try. If you have free money, try. I encourage you, try. I always try. I always build with my partners some systems, even robots, and I put some money there. Just to put V on this belief. Okay, maybe someday it will happen. Maybe 1K it will turn into 500,000 or 1,000,000. Maybe, who knows? You have free money, try. You don't have, do not try. Okay? Just remember one thing from the real world. If you have 1K and you expect to turn it into 100,000, it means 100 other people will have to lose $1,000 in order you make it happen. What are the odds for that? Because trading is a zero-sum game. There are no just money just from nowhere. Okay? It's zero-sum game. If you make money, someone loses. Remember that. And then you'll understand what's your odds to turn 1K into 100K. The next thing is boring days. How many times, for those of you who are with me for, well, at least 3 months, how many times we saw boring days? How many times? Many. Most of them. You know why? Because on trading 66% up to 70% of the days of the trading time is flat, is rangy. You know what is the worst thing you could do for yourself? Force yourself to trade these days. If there is no opportunity, do not be there. Very, very simple. Boring days is very, very famous, and most of the traders force themselves to trade. Why? Why? I'll tell you why. Because some of them leave the jobs to trade and they have to bring the 20 pips per day. Right? Some of them have goals to achieve every single day or every single week or every single month, and they can not let themselves not to trade every single day, one single day. Some think that they are day trader and they have to trade every day. But these days, the boring days, the ranged days, the flat days will kill you. The zigzag days, the volumeless days, they will kill you. Why? To bring yourself into the place where it's impossible to make money. Think about it. The next thing that will ruin our trading is too many instruments to trade. Many traders cannot deal with the idea that there are too many instruments. 40 pairs, more than 10 indices, more than 10 commodities, stocks, bonds. Oh my God, how I can trade it? The answer is very simple. Very simple. For me, it takes between 15 minutes to 1 hour. Depends on every day, depends on many conditions. To go over all the things and know if today I'm going to trade or not. That's all. Can you dedicate 1 hour every day for your trading? I'm sure you can. You can do it even from work. You can do it from your smartphone. Everywhere. Just need to want that. But if you're afraid of this too many instruments, and if you trade the intraday, forget about trading most of them. If you trade intraday, you cannot handle more than 3 up to 5 pairs. It's impossible. It's impossible. Right? So, set your plan, and based on your plan, build your trading portfolio. Build your goal. I showed you the example. There are more than 40 instruments, divergence everywhere, every month on average. Just for example, yeah? So you can not trade 20 days, and on the 21st day there will be your trade. And you will make your money based on your plan that you build. Remember, you do not need to trade everything if you don't have time for that. If your time is limited, accept that. Take it as advantage, benefit from it. If you have only half hour or 1 hour to dedicate, so that's what you need to trade, the daily chart or the weekly chart, the thing that you are going over, and you find it very, very, very fast. You go for daily chart, there is divergence, yes or no, that's all. If the answer is yes, then it takes 2 or 3 or 5 more minutes to analyze this divergence and to build your plan. But if there is no divergence, there is no trade. It's simple. Okay? So based on the time you have, you can understand how many instruments you could trade. And to make your life easier, go to the MetaTrader, go to the window, okay, here, let me show you. It's Windows 8, so it's new to me. Go here, take a pair, okay. Here you see all the instruments. Go right click, and here you can choose what instruments you will see. If you don't want anything, just make hide, or choose the symbols you want. That's all. Alright? Trading style. Very, 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 very common mistake is to tell trading is not for me. This is wrong. Trading is for everyone. Everyone. Exactly as buying a house is for everyone, or buying a food is for everyone, or spending money on a shopping is for everyone. Everyone likes that. Some can spend 2 hours per shopping, some can spend 5 minutes. Okay, it's for everyone. Trading also for everyone. Not every style is for everyone, but trading does, because it involves with money. Where is money, there is everyone's interest. You just need to choose your trading style. Identify yourself. All that I talked so far. Understand who you are. What are your goals? Where are your limits? What are your disadvantages? Where are your advantages? Build yourself. Understand exactly who you are. And this way you can become a trader. And one small recommendation. Do not trade intraday if you did not trade long term first. And I will tell you the reason for that. If you traded long term, then you switched to intraday, okay, you can see that it's not for you, and you can always go back to long term. It's not working like that, by opposite. If you traded the intraday first, and then you switch for long run, but there is no opportunity. On the daily chart we saw there is a divergence per pair once a month. And if you trade intraday, you are used to get trade every day. And if you switch, and then suddenly you need to wait several days until for a trade, that could drive you crazy. And by that you can go and make mistakes, run back to the intraday, and if there is no opportunity, you will force an opportunity because you waste so many days for a long run without trades, so you will force yourself into trading, and that could bring you to a bad place, bad results. And I think you never could become a day trader if you were not long-term trader first. If you did not earn money on a long-term first, you cannot do the opposite. And I know that only because I come from the opposite. I was an intraday trader first of all. That's why when I made the switch, I lost so much money in between. I know what it takes. That's why I can today I can talk about that. Money management. So many people think that there is one money management that work, only one, right? The classical. You risk 1% in order to take 2 or 3 or 4 or 5 or 6. Well, that's classical and that's good, but it has its problems, because with this style you can lose 2 or 3 or 4 times in a row. Then you will profit one, it will cover all your losses, but still not everyone can accept that you will have several losses in a row. Many traders will suffer from that. For me, the only money management that works is if at the end of the period, and the period is not a month, it's not a 2 months, it's not half year, it's at least 1 year, at least 1 year. If at the end of this period you make money, your money management is good. All the rest is not important. Set your goals, set your plan, your style, and the time you can dedicate to trade. And then, and only then, you can choose the best money management for you. Making money. Well, this is something that exactly when we talked about the fear, right? When you're afraid of success or afraid of failures, here is the making money story. So many traders come to this market because they have to make money. And this pressure of making money fast bring them into disaster. So many traders, because of personal stories, run into Forex, run into trading, every financial market trading. And they are pressed, they are stressed to make money fast. And I know these stories. People send me emails. Vlad, I have $1,000. I need to turn it into $10,000 in 2 months. Please help him, please help him, please help me. I cannot help you. I'm sorry. I'm really sorry. I cannot. If you want, I can show you many places where you can where you can lose this money, where you can spend it, but I cannot make this dream. It's impossible. So, if you are stressed on making money fast, please don't trade. Save this money, it will be easier for you. At least you will stay with the $1,000. Forget about the fast returns, fast profits. Forget about that. And as I told you on the, earlier, if you have free money, then try. But if you trade only with the money that you have, the only money you have, forget about the fast returns. You will stay with nothing. How many stories you heard of a kid that turned 1K into 100K? Did anyone meet this kid? Come on, seriously. No one, right? And that's bring it to that. They're the guru stories. Friend, that's good to sell. Really, it's good to sell. It's wonderful to sell a story because many people love stories. Me too. I love stories. I wouldn't ever buy a new computer with Windows 8 right now, for example, if the salesman there wouldn't tell me stories. This computer is perfect or strong, blah blah blah. It makes this and this and this. He sold me a story. I took it. Same as with trading. Okay? There are no gurus. No one is a guru. There are traders. But guru? Come on. Come on. Okay? No one met ever this guy that turned 1K into 100K. So, where are all these gurus? Right? Don't put yourself into the bad place about making money. If you're stressed to make money, you should not trade. Save this money. It will be easier for you. The only way to success in trading, when you trade calm, relaxed, comfortable, and you have time to grow your account. That's the only way. I make a stop for a second to reply the questions. There was a question from Gunus. Can I learn divergences faster by trading shorter time frames like 1 minute or 5 minutes? The answer is no. The answer is no. And the reason for that, Gunnars, is because on the internet there are so many noises that you will just get confused by them. You'll just get confused by them, and then you will not see the real power, the real things, and the real potential of the divergences. That's the only reason. The opposite you can do. If you were trading daily charts and weekly chart, then you can go lower and lower and lower. Not the opposite. Okay. Well, T asked a good question. Holding a position for long term, is it while the trend is against you, is it possible that the prices will never go into the area where you started? No. If you that's where divergences come. And I'm talking about the long run. I'm talking about the 1 minute. I'm talking about the long run, the weekly and the daily charts. When divergence happen, there is a reason for that, and that's the only place where we trade and attack. Let me ask you a question, friends. Can I ask you a question? Let's say you have $200,000. Okay, you have $200,000. An average house costs $100,000. Okay, and you find an opportunity to buy a house for $60,000. Would you buy it? Of course you would, because you know the natural price is 100,000. Right? Like you can buy for 60, repair and sell for 100. Perfect. What would happen if after 1 year the same house will be equal $30,000? Would you go and buy another one, or would you sell the one you already have with a loss? If your answer is I would buy another one, or another two, or another four, you are an investor. You are an investor because you are thinking like an investor. For long run, for natural price, that's my returns. And that's exactly on trading. Think about it. If you enter a trade, and you have an opportunity to enter another trade with a better price than you entered, wouldn't you do it? Of course you would. That's the idea of trading the cycles. That's what I trade. That's what I call investor style. But the only way to succeed with that is negative leverage. Exactly as with the house. You have $200,000 free. You buy one house for 60,000, you buy another house for 30,000, you are still never use all your money. You are using negative leverage. Same in trading. Same in trading. The more negative you are, the less stressful you become. That's the investor style. It's not for everyone. This style is not for everyone, but it works. Everywhere. Not in Forex, not in stocks. Everywhere. Everywhere. Because of the idea of that, as I just told you. Philip says some people will call it catching a falling knife. Yes, but every falling knife, Philip, has a floor where it's going to stop. Every falling knife, right? The only way to deal with falling knives or flying rockets is negative leverage. That's all. That's the only way. This is the only way. Yes, you need a deep pocket for that. Of course, that's what I say. That's what I always say. To trade like an investor, you need to act like an investor. An investor has money. But maybe this sentence is not correct. You don't need that deep pocket. You need very deep pocket if you have very big goals. If you want to make $1,000 per month, for example, you can do it with holding only $20,000 account, for example. Trading stressful completely. Just for example, okay? So the size of the pocket depends from the size of your goals. That's all. Okay. Now the next thing is being right or money. Which you prefer to be? You prefer to be right or earn money? This is very, very common mistake. I hear so many traders talking about that. I was right about the euro. I was right about the pound. I was right about the gold. Well, remember this. Remember this. You do not buy food with the fact you were right. You buy food with money. Right? Remember that. It's good to tell yourself bravo or give yourself some I don't know how to say it in English, some positive words on your shoulder, right? Until, come on, good job, I was right. You buy things with money, not with the idea that you were right. Remember that. And that's, by the way, the part of the guru stories. I get so many things by emails where gurus send themselves. I was right on 2008 when I said that the market is going to be crushed. Okay, I was right too. I made money from that. Did you? Did you? Right? So think who you want to be. A trader and buy things when you make money, or you prefer to be right? Good analyst. I prefer to be trader. You should decide for yourself. Bad mood trading. I will make it simple. If you have a bad day, and we all do sometimes, don't trade. Because if you're in a bad mood and your mind is on a different place, on another place, if you just have a fight with your friend or with your wife or husband or whatever it is, don't trade, because your mind will not be on trading. You can become impatient, and if you are impatient, you can do wrong things. If you have good mood, if you have bad mood or a bad day, just do not trade. I've been there. I made these mistakes. Trust me, it's painful. And the last thing is the old school beliefs. How many times you heard this sentence, friends? Trend is your friend. Million of times, right? But what happens if the trend comes to the end? Let me show you one thing. Okay. Just 1 second. Let me show you. Sorry, one thing. I've been always. That's a very popular argument I have. When many people say, "How can you hold trades running against you?" Right? And well, it's difficult to explain for someone that does not understand what a cycle trading is, but what would you do? Okay, let's take an example where. Okay, let's say here. Okay, this is an uptrend. Okay, and let's say you trade with the trend. You had a correction. Just for example. Okay, just follow me for example. You trade a correction. Let's make it black. Okay, you trade correction. You see it's stopped on a 50 Fibonacci. You buy, and you expect it to grow and grow and grow and grow. Right? Where is that? Where was that? Here, right? Expect to grow and grow. Then it goes, but it doesn't go for the place you expect it to, and then retraces. But because you trend with the trend, you expect it to go higher, and every low it creates, because this is a trend, you start to buy more. But if you buy more when it goes against the trend, because you think that this is a trend and it should push higher, right? So what actually you're doing? You're also trading against the trend, because the trend now is not up, it's down, and you're buying because the longer trend is up, right? So what I'm trying to say is it's a bit difficult to explain in English, that trend is good, trend is correct, because things tend to happen on the trends, and it's everywhere, not just trading. It's a fashion and whatever it is, smartphones, right? Go with the trend, but find the right place to enter. And many people think that divergence is against the trend. No, it's with a new trend, because if there is a divergence, most likely a new trend will be developed, and you are going with a trend, just a new trend, not the running trend, with a new trend. That's all. And that's something that I know it's difficult to explain. That's a very, very common mistake. That's very, very old-fashioned school. Trade only with the trend, but every trend come to the end. Every trend. Okay? And you can profit more if you will be on the new trend and not going with the current trend. Think about it. How many people became a millionaire when they recognized the smartphones on the very, very beginning? How many people become millionaires? Right? How many people today try to develop things for the smartphones when the competition is huge? Right? That's what I'm talking about. Divergence allows you to trade the trend, to catch the trend from the very beginning. Sometimes the trend is not beginning when you expect. Sometimes it goes against you. But it does. When the right time comes, it does. You know how many people invested on smartphones before they became so popular? They waited and they waited and they waited. Today, they all are millionaires. At the beginning, they invested money more and more and more and more and more until it happened. Same is here with the idea of divergence trading. It's not against the trend. It's with the trend. With the new next potential trend. Okay? There's another belief: the only way to make money is to take profits few times bigger than your losses. It's true, but it's true on theory. Because everybody, everywhere, tells that you should risk $100 and take $600. That's beautiful, but it's almost impossible. Because the market not gives you these opportunities all the time. So why can't you risk $100 and take 20 and 20 and 20 and 20 and 20 and 20 several times until you get a big move? And that's why some time ago I came up with the idea 80-20 money management. 80-20. Take the money of 80% of your trade, and with the 20% let it go. Because if you cash this huge move that comes once a while, okay, then you will get a good mood. But on the meantime, until it happens, you can make a lot of trades and a lot of profits by taking a small part. Why is it bad? Why is it bad? Because of the old style belief. Why is it bad? If you earn 9 times 20 pips and you lose 1 time 100 pips, is it bad? No, it's wonderful. You will still make money. So why does it matter how you make money? Remember, that's what I talk about. That's what I talked about. Money management. The only money management is working is if you make money or not. And don't judge yourself after a week or 2. Judge yourself after 1 year. At least. Then you know if you're doing good or not. Trading is difficult. That's another belief. Well, no. Not at all. It's much easier than being a lawyer. It's much easier than being a doctor or a builder or whatever you want. Much easier. And that's why I said earlier, trading is for everyone. There is a special style for everyone, which need to be found. But everyone can do it. Exactly as everyone can be shopping. Trading is like shopping. Okay? You shop your opportunities. Wherever money involved, everyone can be involved. Forex is the risky market exist. That's wrong. You know why? Leverage makes it risky. On stocks, you cannot leverage more than 1 to 4 or 1 to 5 or something like that. Never. On Forex, you can leverage 1 to 200. Right? That's what makes it risky. Forex is the most safe market on the world. Nothing is as safe as Forex. On stocks, any specific stock can drop or rise by 10% per day easy. On Forex, normal movement during a day is between 0.5% to 1% on every pair. Normal. Of course, sometimes it happens for 2% or 3%. It's very, 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 very rare. On commodities, it's common. On Forex, it's not. Because Forex is the only market where one instrument is being traded against another instrument. It's one currency against another currency. That's why the forces always look to balance themselves. Forex is the most safe market to trade. And the most profitable market on the same time. Because of so many instruments. And this is something that so many traders do not understand. The only thing that makes Forex risky is leverage. That's all. If you trade the same leverage, stocks and Forex, on Forex you make much smaller risk. Much smaller risk. And another belief that indicators not really work. Indicators work. And the only reason for that is because they represent the price action. You cannot rely only on that. That's why I say divergence is not only a system, not only a strategy. It's not only strategy. It's a full world of trading. It's a theory. Okay? Indicators help you to find your entry. They not gives you the idea it happens because of the indicator. No. It happens because of the market, the price action, the fundamental. Indicators just make it visual for you. Exactly as you are watching a movie, there are subtitles. Subtitles help you to understand better what the authors are talking about on the movie, right? The same here. Indicators is your subtitle to the real market, to the movie. Market is telling a story. It's like a movie. It's like a story. Use these subtitles. Use these visual tools. Market is not moving because of the indicator. With that I agree. But indicator help you just to see better what's going on. That's all. And by that I finish this webinar. I hope that I opened your eyes on some way and helped you to see some things and understand these things better. And I hope that the most important thing for me is that you learn that you are not a bad trader because of that and that and that. Take that and that and that and turn it into your benefit, into your advantage. Friends, I have a lot of problems myself and I never hide behind that. I hate stop losses, and that's a problem of mine. I cannot risk $100 to take 1,000. I cannot. This is not my style. I tried. I failed. I took my advantage. I took my disadvantage, and I turned them into advantage. And I found my style. And if you need help, I'm here. I'm here. I can help you. Find your own. Go over this webinar again, please. Hear these things again, please. I will put this PDF and I will send it also. Okay? And take the time to identify yourself. Take the time to understand who you are, what problems you suffer from, and find a way, and I can help you how, to overcome them and use them for your advantage. Use them for your trading. Friends, Paul, thank you very much. Friends, thank you very much for being here today. I really appreciate you found the time on your vacations to be there, to be here. I'm confusing the words right now because I talk too much. Sorry. This webinar will be uploaded, of course, and I will send it to you once it's ready. And I wish you a wonderful week and good trading. And if you need any help, do not hesitate. Contact me. I'm here for you. Thanks a lot, friends. I'll see you tomorrow on an open questions and answers webinar. Thank you. Goodbye.